Hey guys, Eric here with you. It's February the 23rd, Friday afternoon. We got about 6.5 minutes here to go in the markets for today, for this week actually. So I just saw an article popped up that said the S&P had broken out of a bull flag pattern, which is a bullish symbol on the daily chart. So this is taking a look at the daily chart, but I think it's a little bit easier to see if we look at it on the hourly here. So I've already added the channel for you. So what a bull flag is when a rally occurs, or there's a bear flag too. So in this case, it being a bull flag, we have this rally, and then the price kind of consolidates in this channel and kind of bounces around in here a few times. And then once it decides to break out one way or the other, then it triggers either a bullish symbol if it breaks out to the upside, or a bearish signal if it breaks out to the downside. So since this thing is just now peeking out of this thing, if it can close above the top of this channel, that would confirm the pattern. The thing that's got me the most concerned about this, and like I said, we'll have to definitely keep an eye on this, because technically that is accurate. It is a bullish signal, so we might have to switch gears. But at the same time, I just wanted to show you, and I'm using SPY here because it's the biggest ETF that tracks the S&P 500, and pretty much all the indexes and ETFs that track the indexes are showing the same thing. We can run through them real quick in a second, but this is hugely alarming to me right down here. There is hardly any buying interest or volume to support this move. So if you take a look here at, say, the average volume kind of setup and stuff like that, you can see here over the past 10 days we've been averaging almost 150 million shares per day. Over the past 3 months it's been closer to 90 million, and today we're at about 60 million. So we're below the recent average and below the more longer term average. So that kind of makes me think that there's really not much conviction, and this is just really a technical, maybe even an algorithm driven bounce to the upside. The thing that was also interesting to me is that while the market or the shares themselves are having relatively low volume, look at the options world here, and it's kind of a totally different story. This is today's volume right here, and this is the daily average over the past 3 months. So that'd be kind of akin to looking at this number over here in the shares. So you can see we're well over 100%, and probably getting 110, 115%, something like that right now. And it's actually a pretty dead heat right now. I was actually kind of thought that was pretty interesting too. This is pretty much an even match here between the bears and the bulls, it looks like. But I think that, like I say, that ultimately the bears will win out, because this down here, like I say, it just tells you that there's not much interest right now, and the fact that we're still we're still below our recent peak here. We're still at a series of lower highs, lower lows, and so that still indicates a bearish pattern. And like I say, the fact that the volume is just totally fallen off the cliff, especially this past week, we haven't really seen much buying since we jumped in there back on the 200-day. But the sellers, I feel like, are just kind of waiting in the wings, and they were waiting for a bounce to get some better prices, and they're getting it now. So, I kind of expected today to be a down day, but like I say, sometimes the machines know best, I guess, or they do best, or they do their own thing. So, like I say, this one's just one that you got to be very careful with, and I stand by that bearish call overall, that I think that we're headed lower. So I just want to give you an update on the close here. So I'll be back with y'all in just a little bit. Take care.